Imagine pulling up to a glowing, sprawling mega mansion at night. In the cryptocurrency world, that mansion has a price tag of $10 billion. That is the market cap, or total perceived value, of a specific token. But if you open the front door and look inside, almost all the rooms are completely bare. Out of that $10 billion sticker price, only $26 million is actually locked inside the property. We can see how extreme this is by looking at this balance scale. The massive block on the left is the $10 billion market cap, and the tiny speck on the right is the actual money backing it up. The gap between those two numbers is nearly 400 times wide. A discrepancy this large draws attention, and right now, one of the top investigators in the crypto space is sounding a loud alarm about what is really going on here. In crypto, survival means learning to ignore the flashy price tag on the outside and checking if the vault on the inside is actually full. A massive valuation means absolutely nothing if the money isn't there to support it. The project we are looking at is called Rain. It operates on a network called Arbitrum, and to be clear, this is a distinct financial project, not the tiny meme coin that happens to share the same name. Rain powers what is essentially a digital betting parlor. It allows anyone to create wagers and trade bets on real-world events, all without a central casino or bookie controlling the odds. To decide who wins these bets, the system uses an AI oracle. You can think of this oracle as an artificial intelligence referee, an impartial judge that reads real-world data and declares the final outcome of the event. An AI-powered betting platform is a highly compelling idea on paper, but when we look under the hood at how the token is actually structured, the math tells a much darker story. We can see the scale of this project on this pie chart, showing Rain's maximum supply of roughly 1.15 trillion tokens. The highlighted slice shows what is actually trading right now, about 716 billion. Notice these tiny slivers breaking off the main slice and catching fire. This deflationary burn permanently destroys a fraction of every single trade. In a healthy ecosystem, destroying tokens is a good thing. By constantly shrinking the number of available tokens, you create scarcity. If demand stays the same while supply drops, the value of the remaining tokens should go up. But that brings us back to a metric called total value locked. This is the actual cash users have deposited into the system to secure the network. It is the real money sitting in the vault. And right now, that locked value remains stubbornly under $30 million. No matter how clever the token-earning mechanics are, if the actual cash deposited is that low, the massive mansion is largely empty. This chart shows the market's reaction. Rain currently trades at $0.014. Panning back to June 2026 reveals its all-time high of 0.016, sparking a long descending trend. Now, watch this dashed floor below the current price, a historical support level the token desperately needs to hold. The price is teetering exactly on this ledge because investors are doing the math. They are waking up to the massive void between the $10 billion hype and the tiny amount of actual cash securing it. Still, there are compelling reasons some buyers remain optimistic. Those token-burning mechanics we looked at are real, fully functional, and actively cutting down the overall supply every day. Add to that a major institutional vote of confidence. A prominent Nasdaq-listed biotech firm has committed $212 million directly to the Rain treasury, injecting serious corporate backing into the project. Yet those positive signs are fighting against severe red flags. A leading on-chain investigator recently mapped out the project's digital footprint and found highly suspicious connections between anonymous wallets controlling the tokens. And hovering above all of this is the inescapable math problem. A 400 times difference between what the market says the token is worth and the cash actually locked inside is a void that is incredibly difficult to justify. So Rain sits right in the middle of a brutal tug of war. On one side, you have heavy-hitting institutional money and clever supply mechanics. On the other, glaring structural warnings and skeptical investigators. While an AI-driven prediction market is certainly a clever piece of technology, the current numbers attached to it reflect pure market hype rather than tangible, locked value. If you decide to explore this project further, Rain is actively trading on major platforms like Coinbase and Kraken, plus decentralized exchanges like Camelot. Remember, this is not financial advice, and you must always do your own research before participating. If you found this breakdown helpful, please like and subscribe for more clear looks into the crypto markets.